This first session then is going to be on COVID, ESG and Build Back Better. And I want to explore the area of whether or not these issues are natural allies or competing forces for investors, because obviously different forces pull investment selection in different directions. These companies were really well placed to discuss this, and I've got 8 questions. Just to remind all the panelists, we have got 40 minutes for this session. I'm hoping Sue will keep me on track with timings again. And what I'm going to do is I'm going to ask you all to just briefly probably talk for a couple of minutes to introduce yourselves, and then with each of the questions, I'll suggest a couple of you to answer it first, and if others want to jump in, please do just talk, although I thought I'd see you on the screen, I can't, so that's going to make it a bit more tricky. So can I start off first of all then by asking everyone to introduce themselves? Let's start with William from the wonderful Triodos, first of all, please.
Hi, my name is William de Vries. I'm from Triodos Investment Management in the Netherlands. We only do ESG and impact investing, and we are very committed to make money work for positive change. That's our mission. That's what we have been doing for the last 30, 40 years, and we're still on that. And I'm very interested in the subject at the moment.
It's quite important, isn't it? The minor issue of ESG and COVID. Terrific, thank you. So let's go then to, let's say Alex Game. I've got my list in front of me, so I'm just going to run through it in no particular order. So Alex, Alex G, Alex from Unicorn.
Hi, morning all. Thank you very much for dialing in today. So my name's Alex Game. I'm the ethical officer at Unicorn, and that really makes me responsible for the implementation and oversight of ESG across the business. So just a little bit of background on Unicorn. We are small and mid-cap UK equity specialists. We manage about 1.3 billion AUM in total, and that's spread across 10 different products, each with slightly different remits, but really focusing on UK small and mid-caps. In terms of our investment approach, we think it's very well suited to ESG. Investing in small and mid-caps really does require a hands-on approach, and this is crucial to understanding underlying ESG risks within a business or the sector that a company operates in. We run high conviction portfolios and have very long-term investment horizons. And that means that we tend to accumulate fairly meaningful equity stakes over the course of the investment. And that in turn provides us with some excellent corporate access opportunities and really gives us the opportunity to engage with these businesses over a very long time frame. In terms of my view on the topic that we're discussing today, building back better, clearly this concept's been around for some time and generally with pretty mixed results, I think it's fair to say. But I do think the pandemic has really highlighted some of the challenges that we face both from an environmental and a social perspective. And I think we need to really try and use that as a motivator for change.
Absolutely. Thank you very much, Alex. Yes, indeed. And I like the fact you're such a focused company, just really, really in deep with the companies that you work with. It's a really brilliant thing of Unicorn. Which brings me then next on my list to Vicki. So Vicki, my former stomping ground, shall we say. So Vicki, I'd like to introduce who is now BMO, but obviously previously different name.
Previously FNC. Hi Julia, good to see you. I'm Vicki Bakhshi from BMO Global Asset Management. We're a large global asset manager. Some of you may remember our predecessor company, FNC, which I joined, and I've been there for 14 years now, working particularly on climate change, but also on impact and impact reporting. And I'm part of a 20 member team now doing the engagement, proxy voting, ESG integration across the business. In terms of our approach to ESG, ESG is part and parcel of every investment process that we have. It's fully integrated across asset classes. We do also have some specialist responsible investment products, which have been going now for 35 years with over £5 billion in assets under management. In terms of COVID, this has been a major focus of our engagement with companies this year. And we've published or are publishing 9 thematic pieces on the impact of COVID on various aspects of ESG, ranging from the impact of sort of plastic waste in the oceans from all of this PPE, implications for data privacy, for climate change, for labour issues, for how companies are holding AGMs. So in terms of my view, I mean, this is such a deep and profound change to our lives. I think it's quite hard to say positive or negative. There's many different impacts. I think one overriding thing which will perhaps come out is it's really highlighted and exacerbated existing inequalities in our system, and I think that makes responsible investment more important than ever.
Absolutely. And thank you, Vicki. So completely last but not least, Alex Bibani from the wonderful Sarasin with their, shall we say, slightly bullish approach to this area, which of course many of us absolutely love. So Alex, please.
Hi, thanks, Julia. So, yeah, Alex Bibani from Sarasin and Partners. We are a UK-based asset manager. We do multi-asset. I predominantly work on equities. We have a very long history in managing products with an ESG focus. So ESG is integrated across our entire investment process, across all asset classes. And this is something that we've been doing for decades, really. So it is, it's our heritage, it's in our blood. It's something that we take very seriously. I run a global equity fund, the Sarasin Responsible Global Equity Fund, which has exclusions on top of the normal ESG integration. And I would, sort of summarize my views on Build Back Better, very much as Alex and Vicki describe. The concepts have been around for quite some time. Some of them are very similar to the SDGs in some respects. Many sort of government orientated policies that would need to really make it happen properly. But I think it has brought the issue to front and center. So it's not just the ESG investment managers that are looking at it, it's now everybody that's looking at it. And I think that the more people that are aware of the inequalities, the stronger the team and the stronger the voice, and hopefully we can get some traction.
Lovely, thank you. Sorry, I'm just trying to get used to this muting myself every few moments and making sure that I'm not interrupting your session at all. That is excellent. Thank you very much for the introduction, everybody. Now, as you all know, I've got a list of questions here, but I really do want to keep this as an informal conversation. So if you want to bring things in while we're going along, I'm aware that William, you spoke first in that. Is there anything that you wanted to add first of all to cover off any of the bits that were said in other people's introductions?
No. For me, it was a short introduction, of course, and the panel is going to discuss whether we should see COVID as an ally. I'm very happy with the other panelists.
Okay. Cool.
But I have to warn you, we are of the opinion that you can't be partly green, you can't do both, and also there is no way of escaping ESG investment. So I know that it is sometimes difficult to grasp for some people, but I think there is no other choice. So we will become mainstream, and as such, it will be very, very difficult to explain why you're not doing this at the moment. And if you're running an equity fund, we are doing the same thing, but we think you should do it with ESG factors into your consideration in your investment process. So we'll see where this ends.
Absolutely. Now, this is, there's no doubt the direction of travel is set, isn't it? So on to the first question, which builds on exactly what you were just saying there, William. Impact of COVID on the ESG and impact community so far. It's raised profile. Is there anything else that from a Triodos perspective you'd say? Obviously, it makes it more easy for Triodos to say, right, we are the future, and firms that take this seriously to really position themselves strongly. Is there anything else you wanted to add on that side?
Well, no, I don't know whether we are the future. I think ESG or impact investing is the future, and we are just there. We were started in the 80s, last century, to change the financial world, to make money work for a better world. And if I look around me right now, given the situation where we are right in, I think everybody is becoming more and more aware of that we should change things. And COVID is just a catalyst. It's a catalyst of an already a trend evolving in the world, and we are getting more aware of things. And at the same time, if we see what is happening right now with all the governments promising to do more in green and renewable energy, green investments, also social investments, because I think you shouldn't do only environmental things. You should also look at what is happening with environment, with the social issues, with the large discrepancy of poverty between a large group of people and a small group of people profiting from the current policies. But the real thing, what we really are focusing on is that despite the fact that everybody is promising to get to target the SDGs, to get to let's say a more and a better world, they are investing more money in the old economy, in the air how do you say that? Air transport, old economy, steel industry, car industry, that kind of things, which we really have to change. And yeah, although they make good promises, we would like to see more effort even there. So I really like the person, the Mister from the FCA, who is going to oblige at least everybody to explain why they are doing it, or what they are doing, or why they are not doing it.
Okay, well, I wouldn't hold your breath for that one, but yes, I mean, the messages were very positive, weren't they? Can I come on to Alex then, Alex Bibani, just to come back to the impact of COVID on the ESG and impact community? Do you have thoughts on that?
I think for us, it's caused a slight shift. I mean, we would have spent much of our time engaging with businesses on governance concerns historically. We continue to do that, but I think this year we've done a little bit more on social. So we've been talking, if you look at the ICCR statement on coronavirus response, we're signatories to that. We've been liaising with many of our companies to see how they're treating all stakeholders through this pandemic, and actually it's those are the things that have come to everybody's mind. The fair treatment of everybody, that links back into Build Back Better, and it's not just managing for profit, it's actually aligning your business with social norms and wants. As William said, it's just fast forwarded what was already happening, and that can only be a good thing. If there is a good thing to come out of the pandemic, is that it's brought this awareness closer to everybody's minds.
Yeah, I think that's right. I mean, it's a bad thing, clearly, that doesn't need to be explained in any detail, but if it helps people to recognise the importance of social issues, then it will have brought some benefits, because the inequalities, etc., we'll talk about later, are just, they're gaping, wounds in society that need to be healed. I'm going to come on to the next question there, just to try and keep us a little bit on track. So COVID, so I'll come to Alex Game first of all, if I may.
Sure.
So do you think that COVID will help or hinder our efforts to build back better? I think you touched on this very slightly, but would you like to expand on your thoughts on that at all, Alex?
Yeah, sure. So I'm going to sit pretty firmly on the fence here and say that it's both helped and hindered. In terms of the impact of COVID on broader ESG trends, I think the impact will be relatively limited in the long term. We've seen so far, in many cases since the start of the pandemic, an acceleration actually in long-term trends. I think that's no different to the ESG space. We at Unicorn have seen it firsthand over the last few years, both in terms of questions asked of us by our investors, and also the approach taken by the companies that we invest in terms of addressing ESG concerns and improving disclosure. However, I think we do need to be realistic, and COVID will undoubtedly have an impact, certainly in the short term. Focusing at the company level, which is where we work on a day-to-day basis, given we are stock pickers, clearly the primary focus of companies over the last few months has been survival and keeping staff, customers and suppliers safe. And that means that sustainability projects that can sometimes have a longer term payback might be pushed to the right until some of the short term uncertainty is passed, and also until companies have a better grip on cash flows. Having said that, that's part of the reason why we at Unicorn, we do like to invest in well-capitalized, market-leading businesses with strong balance sheets, as these companies generally can continue to invest, taking a longer-term approach throughout periods of broader uncertainty.
Absolutely. Thank you. Vicki, would you like to add to that? I'm sure you've got the question, but it was around, will COVID help or hinder Build Back Better? Are you on the fence, or do you have a thought one way or the other?
I think with Build Back Better, I guess there's a couple of questions here. One is in terms of, will it shift consumer behaviour, and another is how governments respond and whether we'll genuinely get the green rebuilding that the European Commission and others have been saying. And sometimes it does take a massive shock to change old habits. So it took the shock of the publicity around plastics in oceans for us to start to think differently about single-use plastic. I think it's taking this shock to make people think differently about work habits and whether we need to travel as much and whether this commuting makes sense. And I think there will be some. I mean, clearly we're seeing some things revert. Not things aren't going to change, radically perhaps. But I think we are seeing a shift towards thinking about actually there are better ways of doing things. There's better ways of working, more efficient ways to move. So I think that will be a sort of tailwind for sustainability. Yeah. I also think there are some opportunities from the stance of governments about green rebuilding and sort of putting more. It's a structural shift going on towards more public spending and less private spending right now, which is unusual to be happening globally at the same time. And for those governments that have got a strong commitment to sustainability, there is a genuine opportunity there for that money to be spent in a good way to build the kind of more resilient infrastructure that we need. Okay. So I said more positive than negative on the sort of Build Back Better.
Yeah, that's interesting, because obviously a lot of the media coverage you're seeing within our sector is all really positive. But I think as we're hearing from some of the panelists, that's not permeating everywhere, is it? So thank you. That's really interesting. So the next question then, I figured that William and Alex Bibani would be really well placed to answer this one. I'll come to William first. We've got a mixture of people on the call today with different levels of experience in this area. So I wondered if you could just articulate, I mean, we can call it Build Back Better, or we can just call it the future that you and I have all been talking about all this time. But could you just articulate kind of what that looks like and what you want to see happen? William, please, if you can kick off.
Well, the first question you have to ask yourself, we are not going back to where we were. There's going to be another normal. But the first question you have to ask yourself is economic prosperity. Is that also the norm for well-being? Do we have to maintain the current growth path, and are we going to only look at financial measures to see whether we are doing well? And for that, from that reason, from that angle, we think that you really should focus on, yes, I'm investing for the future, but what would that future look like? And do I want to invest in a future that, yes, gives me a high pension, maybe in the nominal terms, but in the end, I'm not able to live outside the door because of the fact that there are viruses or other air polluting things around. So we are really looking at a world where this transition will take place, and COVID, yeah, luckily is making this transition a faster movement at the moment. And we will really go to a world where the human being is at the center stage. And that means that is environment, but also the way they interact has to change in a positive way, and that's what we are looking for. That's maybe it's not the easy word, but we really want to change finance in order to finance change. That's what we're doing.
Nice line there. Yes, I like.
Yeah,
that.
That's our motto at the moment.
I like that. That's good. I may borrow that as well.
Please.
So was it Alex? It was Alex Bibani. I said I'd come back to on this one, wasn't it? So Alex, would you like to expand on that? Change finance change and all that?
Yeah, I don't think I can beat that strapline. But I think, as an equity investor, we have a role to play. We want companies to behave in a way that aligns with societal wishes and norms. We want to invest in companies who are solving problems, not causing problems. Whether it's Build Back Better, the Sustainable Development Goals, companies have an important role to play in building a fair and cohesive society. We will do our best to promote that, and through engagement with businesses, we will push them and use our votes accordingly. Just in terms of the fund that I manage, I would say that it's most closely aligned with sort of principle 3, around calling for a Green New Deal to decarbonize the economy. We've been engaging with corporates for years on this already. So at Sarasin, we launched our climate pledge at the start of 2019. And we've been asking companies to align their business practices with a net zero world. And we will routinely vote against directors who fail to take climate risk seriously. And, we think that's really important. Again, it's what William said. It's, there's no point having all of this money if there's nothing to do with it in 50 years. So, climate really is, at the sort of the front of what we do at Sarasin, amongst other things.
Yeah. No, that absolutely makes sense. Can I just offer this out to Vicki and Alex Game? Is there anything you wanted to add onto that specific line before we move on? Yeah, maybe I can see both of you, so if you raise your hands if there's anything. No?
Yeah, just one thing I was going to add is a slightly different take on it, is a thought of how data and technology has been central in this crisis, both in terms of the sort of sudden shift to home working and the issues that have come with that, the data privacy issues and the sort of data tracking that has been going on, the sort of the opportunity for cybercrime that results from COVID. So Google back in April was blocking 18 million phishing emails a day on COVID. Wow. And that's something we've been talking to companies about through our engagement for a while, is the sort of the critical issue of data and data control. And building back better, I think, also means looking at these broader issues as well, and companies taking more responsibility for how they use data, and technology companies helping us to provide solutions which will help with some of the social issues we're facing.
I think data is hugely important, really relevant. Does anyone else want to come in on that? Feel free just to talk if you did. No, I shall, in which case I shall move on to the next one. So the next question that I had drafted was, how has all this changed then since COVID took root? And obviously the implication there is about social issues, but well, shall I start with you, Alex Game? Did you have thoughts on how this, what are you hearing from people? Because your take is slightly different from others on this, and we've got to get more companies like Unicorn, obviously integrating across the board, because that's fantastic. We've got to move everyone to understand how you integrate ESG risk into everything. And I know you mentioned the other day having recently joined the PRI and that kind of thing, which is great. But yeah. Are there other things that you would want to touch on about how this is looking like it's changing for you at the moment?
Yeah, I think it's been touched on already. In recent years, clearly the environmental piece has probably taken the most prominence, and that's been driven by growing media coverage and popular movements such as Extinction Rebellion. So awareness of climate change, I think, is probably as high as it's ever been. Proof of that, we don't need to look any further than the world record broken by Sir David Attenborough for being the fastest ever Instagram new account to reach 1 million followers. So yeah, that really does show how engaged and aware people are of climate change issues now. But I think it's already been touched on. The COVID has certainly put the social piece under a greater spotlight. The pandemic's really exposed some of the inequalities in our society, poor working conditions in many jobs, underfunded public services, cramped living conditions. So I've no doubt that the pandemic will amplify some of those inequalities that we see in our society. Clearly, the impacts of COVID directly in terms of the data isn't quite available at the local level yet, but I would have thought once it is made available, it will really show some quite shocking disparities in the way that this disease has affected different communities, different populations. So I think the policy response to that has to be to build back better, to address a wide-ranging source of outcomes. But I think additional investment in human capital is key, really. So that's investing in education and skills at all ages. The particular focus, I guess, on improving outcomes for disadvantaged students. I think that would really help level up opportunities in regions. The government did try and make a good stab at this with the Cyber First programme. Clearly, it had a fairly calamitous initial publicity campaign that goes with that programme, but I think that does show quite good initiative in terms of providing people with opportunities to upskill, and that can be quite important in trying to level up across regions. Yeah,
no, absolutely, thank you. And I think I like your point about the data not being there. That was also obviously made by the FCA earlier. I was on a call few days ago that made me laugh, and actuaries were talking about all the changes going on. And someone made the comment about there being some fairly heroic assumptions being made by some actuaries and some people managing data in some spheres in this market. And I think it's, I think seeing some of the data that's being used as what it is, i.e. it's imperfect, it's a best guess, I think remains really important. But until we start doing that, we're not going to get better. So that's what we've got to do. But people need to recognise this is what it is. So Vicki, did you want to come in on this point too?
Yeah, I mean, I think this spotlight on social issues is really important, because I think it's, you know, we've run engagement with companies on social issues for years. But I think it has been seen as something of the poor relation of the ES and G, partly because of, you know, coming back to those data issues, it's harder to measure this stuff than it is carbon emissions or number of independent directors. But it's something we've definitely focused on. And in our engagement, I think when we think about the impact of COVID on labour forces, we've seen lots of stuff in the media about, you know, Wetherspoons or a sports director, sort of the employees, but we're even more worried about some of the indirect employment, so that particularly in supply chains. We've been looking right now at India, and India, in a couple of states of India, including Uttar Pradesh, have suspended some of their key labour laws to help companies cope with the COVID pandemic. And this is really dangerous, and it's a crisis in the making. It's something we've been really worried about, but it's hidden. It's not something we see in the media. So we've been engaging with some big brands like The Gap and Marks and Spencer's, making sure that, you know, we're highlighting this to them, that they know investors are aware of it, and urging them to work with their suppliers to maintain their pre-COVID standards. Gosh,
that's horrible, isn't it? And you do wonder, with, especially when companies are dealing with their own crises, if they've got any real hope of being on top of this stuff if investors like you don't tell them, because it's just not. Yeah, I mean, for some massive companies they'll cope, but others just won't cope on their own, will they? So I guess that kind of underlines the important role that investors can play in this if you're working with a range of companies. So let's bring this on to another question, which I may well try and open up to all four of you. But the next question then, so something that really bothers me about all of this is that so many people miss the whole interconnectedness of things, and the fact that we're really vulnerable. And of course, COVID has really highlighted that, and people have recognised that actually we're not masters of the universe, etc. You know, things can disrupt us really, really swiftly. But do you think that people have recognised that, or do you think we're going to revert swiftly to business as usual? What's your take on that? So let's start maybe with William.
Okay, well, I believe I already answered that, but we are certainly not going back to normal. I think we have gained in a quick way another view on how we work together, how we communicate together, whether we need to travel a lot. If we travel, what kind of means we use to travel. So that's another. But also on programs and supports, education, all these kind of things. I think we are just at the start of a whole new development, and this change will maybe slow down a bit because of the fact that hopefully in some time we get rid of, let's say, these lockdowns, and we can socially interact even better, and we could do this seminar live again the next time. Somewhere in London or another place, maybe in Holland, we would be very happy to do that. So that will be a good thing. So, but at the same time, I would say yes, no, we are not going back to normal. There is too much developments going on, and it's just a matter of making sure that we steer everything in the right direction. I very much agree with Vicki. She was just giving one example of how we should really be wary of wrong developments by going, let's say, for the capitalistic approach again, and not ensuring that worker rights are not trampled down because of the fact that profit is the main thing that we are looking for. We shouldn't do that. It's really important to if we support an airline, we should be able to demand some insights in what they are going to do with the money and how they are going to invest in the future, and not just give them the money and yes, we'll come back to you if we pay our dividend again. So that's not what we want. So I know it's a bit sometimes dangerous to say in the financial world, and probably the public here doesn't agree, or does agree much more than let's say the average financial world. But in general, I would say yes, we are not going to go back to normal again. And everybody who thinks that will happen is I think is just going for an illusion. Maybe a bit strong, but I don't hear you anymore. Julia, you're on mute.
I'm on mute. Sorry. Yes.
Okay.
That's me reading questions as they're coming up at the same time. Sorry.
Yeah.
I was just going to say, do you think the penny has dropped? That everything's really interconnected, and we live on the planet courtesy of planet Earth letting us be here?
Well, no. I think a large group of the people still don't really see the problem, because they are still trying to live and going back to, let's say, what was supposed to be normal. So we really need to do some work there. But in the end, this penny will drop, because there is no other choice. So I really think that there is a lot of work to do, also for governments, but also for, let's say, leading figures in the world, to make clear that this is something that is dangerous, that will change the way we work, and that we will go into a new era.
Okay, thank you. Can I switch to Alex then for that one about interconnectedness, and will it revert?
I'm slightly, I'm hopeful that William's view turns out to be the right view. I'm slightly less optimistic. If you look at what's happening in China, unfortunately, it does almost look like business as usual. It's a sort of a celebration that they've managed to crack code. The data that we see and the articles that we read and the pictures that we see, it does seem to be a celebration that they've beaten COVID, and that celebration is life is back to normal. That's not what we want, as William quite rightly says. But there is hope that in Europe, with the Green Deal in the UK, that we can make change, and that hopefully the rest of the world follows. Obviously, China is committed to net zero by 2060, so hopefully that will bring about some of the change that we're looking for. I think my biggest worry is that the effects of this pandemic will be felt for many, many years. And we don't know what those are at the moment. In the UK, we've spent over £200 billion. That will need to be paid back somehow through higher taxes on citizens, on corporates, or on people. And that higher tax rate will always be a friendly reminder of the pain that we all suffered. So I think that this will be felt for many years. I really do hope that it changes the way that we treat each other, and the way that all stakeholder groups are treated, in general, and that the inequalities, that have been brought to the front here can be addressed. Okay,
thank you. Vicki or Alex, Game, did you want to jump in just very briefly on that one? We've got 6 minutes left, so if I've missed something massive, please do say. Or if you,
I'll just say one thing, is that one thing this does show is this pandemic requires stakeholders to work together in new ways to solve it. And I think that's the sort of the lesson for issues like climate change, like achieving the Sustainable Development Goals. It's that no one group alone can solve it. We do need more collaboration, and we need more cross-sectoral collaboration. So investors need to be partnering with the companies they're investing, partnering with NGOs, sort of widening out the net, because these big systemic issues can't be solved just by one individual company or an investor or a group alone. So I think that for me is one of the big lessons.
Yeah, thank you. I think that's a really important point. In a world where we all seem to be more disconnected in so many ways, we've absolutely got to collaborate. I thank you. I love that introduction. Alex, was there anything, or should we? You're not waving at me, so I will move on then to, we've just got one more question, which is in the final list, then we'll move to wrapping up. But just to say, on balance, do you think this has been helpful? What we've gone through over the last 6 months or so, and I know this is kind of repeating the point, but I'm just wondering if there's anything else. So maybe Alex, would you like to comment on that first? Alex Game?
Yeah, sure. I mean, it's difficult to say it's been helpful, because obviously one needs to be mindful that many people have lost loved ones, and families and individuals have lost financial security as a result of the pandemic. But having said that, it certainly exposed some of the structural weaknesses in our society, and also the risks of continuous encroachment of humans into the natural world. All of which gives greater incentive to build back better. So it's also shown that governments around the world can act very boldly and to great effect in the face of crisis. And clearly to address some of these broader environmental and social issues we face, it will require similarly bold and transformative action. So perhaps we can take some encouragement that governments are able and willing to do that when motivated.
I think that's really important. I mean, I put that out in a blog, I think towards the end of March, just saying exactly that. It shows that we can do it. We can act really fast. And I would love them to be able to take the same approach to climate change. I mean, what on earth are we doing there? Some of us, well, Vicki, you've been talking on that one for a very long while. You might like to just mention if you want. But Vicki, did you want to add something else in on that around, obviously it's not, COVID's clearly dreadful, but might this be a catalyst for something better?
I think it's forced some changes that might not have otherwise happened. Like I said, would we all be really thinking about how we work in such a profound way if this hadn't come about? So I think it has done that. I'll mention climate change just because next year is so critically important. Climate engagement was our top priority this year. We've got COP26 next year, delayed by a year, but actually gives us more opportunity to build momentum through engaging with companies, through taking action as investors. COVID caused a temporary blip down in emissions, but that's not the kind of fundamental shift that we need. We still need this profound energy transition. And yeah, I really hope that governments will be as bold on this as some at least have managed to be on COVID.
Right, lovely. Thank you, Vicki. Can I ask you all then to just give some closing remarks, if that's okay? Why don't I start with William? We've just got a couple of minutes, so 30 seconds or something, please, William.
Yeah, well, like you said, I think these things have changed and things have moved in the right direction, despite all the bad things. And what we really like at Triodos at the moment, that even there is an initiative to start a green guild by the UK government, which I'm from the bond side, we really would like that. We would really like to happen that would happen, because that would really show the commitment of this or any UK government. So hopefully we can see that next year, in line with what Vicki said on the COP21. This would be a massive success. Yes.
Yeah, lovely. Yes, and that green guilt thing I think is great. I had someone offer to come in and talk on this for this event, and I just decided the agenda was too packed.
Okay.
It'll be hopefully massive if that works. Alex Bibani, can I come to you next?
Absolutely. Look, we will continue to engage with corporates, to ensure the fair treatment of all stakeholders. We will ask them to align their business practices with a net zero world, and we do this because it's the right thing to do, and it protects our clients' capital.
Thank you. And Alex Game?
Yeah, I would agree with that. It's just, from the broader macro perspective, clearly this pandemic has highlighted some very severe issues, which we hope governments will act on and create policies. From our perspective at Unicorn, we have very strong relationships with our investee companies, so engaging over a long time period and just making sure that they are hitting the standards that we expect of them, that the investment community expects of them is going to be crucial, I think, for driving change. And ultimately, as a long-term investor, you really need to be thinking about longer-term sustainability in terms of both environmental and social aspects, because it all feeds into the long-term value proposition of those businesses.
Absolutely. Yeah, good, absolutely. It's all interconnected, as I say. Vicki, I will finish with you having the final word, please.
Sure. I mean, I think, like I said at the beginning, one thing this just really highlights to me is inequality, and we as investors need to be really thinking profoundly about inequality and the impact that has on the sustainability of the global community and the global economy. The experience of the pandemic of people like me who are able to sit at home in front of a laptop versus someone who works in a meatpacking factory or someone in India in a garment factory is so profoundly different. The Black Lives Matter campaign, also really raised the profile of racial inequality. And I think that as investors, we need to be taking that, not just thinking about ESG integration, but thinking about that sort of broader purpose that we have to tackle some of the kind of underlying inequalities in society.
Absolutely. Yeah, perfect finish. Thank you. Brilliant, Vicki. And with that, I will say thank you to William from Triodos, Alex from Unicorn, Vicki from BMO, and Alex from Sarasin Partners. Thank you very much, everybody, for agreeing to come onto this panel. I really appreciate it.